So you have successfully been able to stack your FU money. Congratulations. And I'm sure your next question is, okay, so what do I do with this money? Well, in this video, I will give you six ways to invest your FU money. For those of you who don't know me, my name is Sophia Lynette, better known on YouTube as the Global Nurse Expat. And on this channel, I talk about all things global travel, expat life, digital nomading, and tips, tricks, and ways to go about stacking your funds so that you can live your best life doing any and all of the above that I just now described. So if you are interested in any of these topics, please make sure that you like, share, and subscribe to this channel. Like these videos and also hit that notification bell so that when I upload new content or go live, you'll be the first to know about it, okay? So we're going to get right into this. Before I get started, I want to stress the fact that I am not a professional financial advisor or a stock advisor at all. These are just my tips and tricks on how I accumulate my wealth. And I just don't want anyone to get it twisted out here that I am giving financial advice, because I'm not. I am just sharing the knowledge. Okay, it is the individual's responsibility to research and look into everything that I'm saying for themselves before they make any moves with their finances. Okay, so I just want to put that out there. I am not in no way, in any way, a financial expert. All right, so let me just make that clear. All right, so here we go. Number one, deposit it into a high yield savings account. And I tend to like the SoFi account. And of course, I will put all of the resources in the video details for you. So why I like SoFi is because it offers you a 4.5 APY, that is the annual premium yield, and a $250 cash back with direct deposit. So both of these features, you have to set up direct deposit of your paycheck. SoFi is also FDIC insured up to $2 million, which is 4 times the amount of FDIC insurance from your traditional banks such as Bank of America, Chase, Wells Fargo. Okay, SoFi also offers no account fees and no fees for overdraft. So they offer overdraft protection. Pardon me, I am sweating out here in these Houston streets. It is hot, hot. Okay, so SoFi is a good option for your high yield savings. They do also offer checking account as well. So I would say check out all of the pros and cons and features that they offer on their website. So, just to reiterate, 4.5% APY will yield you, if you, let's say you have $10,000 in your SoFi account. Well, you will get back in APY $450. That will be your annual yield on $10,000. So that's a pretty high yield as far as savings accounts are concerned. So that is a quick way to accumulate extra money on the money that you have deposited. Okay. Also remember that in general, we should be having 3 to 6 months worth of our expenses in a savings account. And I suggest, and that's at all times. And I would bump that up to closer to 6 months if you're a homeowner, versus 3 months if you are a renter. So I would definitely recommend having that buffer money, that emergency living expense money in a high yield savings account. So you can start letting that money accumulate and work for you. The number two way to invest your FU money. Invest in a 3 ETF fund. So you're saying to yourself, what is an ETF fund? Well, an ETF fund or exchange traded fund is an investment vehicle that combines the features of both a mutual fund and a stock. It is designed to track the performance of an underlying index, commodity, or a basket of assets. ETFs are traded on the stock exchange just like individual stocks, and their prices fluctuate throughout the trading day. They offer investors the opportunity to gain exposure to a diversified portfolio of stocks, bonds, and other assets in a single investment. So, what exactly does all of that mean? Well, let me just break it down to you. An ETF is like going to a restaurant, a Golden Corral, for lack of a better example. So, at Golden Corral, instead of buying individual entrees, you go ahead and you pay for the entire buffet. And that way you are entitled to having a little bit of food from each area of the buffet. All right, it gives you diversity and you're not stuck with just one piece of meat on your plate. So that is basically what an ETF is in a nutshell. It gives you a variety of holdings across a particular market, like let's just say the S&P, for example, which are the Fortune 500 companies. If you choose that index, it gives you a pretty much across the board sample of a piece of all of those companies. Okay, so you pretty much buy that ETF in shares, depending on, um, how much money you have to invest, and even if you don't have enough to buy a full share, most ETFs offer fractional shares. So it's a good way to get into the market, so to speak. And if you are interested in ETFs or have more questions about it, I am giving a live webinar or a live workshop, so to speak, on setting up a brokerage fund and selecting ETFs. I have tips on specific ETFs to choose when setting up your portfolio. And that workshop will be live on Facebook and on YouTube. I believe the date is November 5th, which is a Sunday at 2 p.m. So check me out on there and check out the actual preview or the posted event. So this way you kind of can prepare yourself on to what to expect, as to what to expect and what to bring to that particular workshop. It is very hot out here. I think I'm gonna move this party to inside. All right. Okay, so I must add that before you can invest in ETFs or any kind of stocks or bonds, you have to open up a brokerage fund. And there are plenty of brokerage funds online platforms such as Charles Schwab, Fidelity, and Robinhood. And most of these online brokerage fund, most of these online brokerage platforms will allow you to open your account with no minimum. So you can just open your account, and before you start trading or setting up, to trade your ETFs or your index funds or your individual stocks, you have to deposit your money. You have to have whatever, depends on which kind of commodities you're trading. That will depend on how much money you want to have in your fund. I know for index funds and for stocks, generally speaking, the average amount that you must have in the brokerage account is like $1,000. With ETFs, it's usually lower. So you have to, it's contingent on which fund you choose. Pardon me, my dog is playing with her toy. So that's what that squeaky noise is. Charles Schwab is one example of a brokerage fund. Robinhood is another platform, and it's very beginner friendly, and Fidelity. Number 3, open up a Roth IRA. So basically, a Roth IRA is I love it. It's like one of my favorites. It's basically the tax-free pathway to becoming a millionaire. So it, of course, has some rules, but in general, those that are younger than 50 years of age can contribute up to $6,500 per year into their Roth IRA, and those that are 50 and older can contribute up to $7,500. That's $7,500 per year into their Roth IRA. The over 50 gang has a higher amount that they can contribute as a mechanism for those like me who got started late in the game. Okay, so basically, you set up your Roth IRA and you deposit your funds either all at once, or you can do the Roth IRA challenge, which is very popular these days, where you contribute a fixed amount every week, or every other week, or contingent on when you get paid, or just randomly. There are plenty of Roth IRA challenges out there. If you are interested in that and want more information on it, you could always hit me up and I can point you in the right direction. But basically, you can do this on your own too. You can just set the money aside from your account, or delegate it from your direct deposit into your Roth IRA on a consistent basis and go from there. Don't forget, though, that once the money is in there, you have to designate it to whatever commodity or stock or ETF that you would like to contribute to. And the difference between this and the brokerage fund is the Roth IRA, like I said, is tax-free. It's for the long term, and it's tax-free if you take it out at age 59. So if you withdraw it by age 59, it's tax-free. If you withdraw it before age 59, I believe there are penalties, but you want to look into that. And back to the ETFs. ETFs are not meant to invest one week and then next week you want to take them out. Basically, with an ETF, you're in it for the long run, okay? You want to stay invested for 10, 20, 30, 40 years, or forever, okay? Because what happens is it matures over time and your dividends increase. So your passive income increases. So you want to keep reinvesting. It's not a one and done thing. It's an over time investment. As is all of these really. So if it's something that you can't commit to, I mean, you should discipline yourself to be able to invest for the long run. That's how people get rich and set themselves up for retirement and for having passive income. So, with the ETFs, you set it up and it's on autopilot. You don't have to keep changing, buying, selling. I mean, you can, but basically it's set it and forget it. Same with the Roth IRA. Okay, number 4 on my list, and it's probably one that is probably the least interesting of all of the tips. Okay, and that is pay off your high interest debts. Okay, if you pay off your high interest debts first, you start with the highest interest credit card or loan that you have. Pay that off completely and work your way down the list. That frees up all of your assets to invest in other areas of your portfolio, such as ETFs or your Roth IRA or another investment that I'm going to get into here shortly. All right. So, yes, pay off your high interest debts, and that will free up a lot of your funds. Number 5 on my list, invest in REITs, also known as real estate investment trusts. What is exactly is that? So a REIT is an investment in shares of commercial property. So basically, you can get into real estate without ever owning outright a piece of real estate on your own. You don't have to have a down payment. You don't have to have closing costs. You don't have to physically own a piece of property. A good way, though, of getting into real estate and diversifying your portfolio is through REITs. Okay, REITs are traded on the market, and they are dividend-based income. They are very reliable, also. Okay, so basically, your shares in the REITs will mature over time. Again, these are long-term investments, and you will still be paid dividends depending on the REIT. It could be quarterly or it could be annually. Okay. By law, REITs are required to pay 90% of their income to shareholders. Okay. And, I will put down a website for you to check out um, all of the REITs available for sharing, for buying stock in. Okay, and generally speaking, REITs, they range from about $125 to $150 per share, and most REITs allow you to buy fractional shares, so basically a piece of a share. Okay, if you don't outright want to buy an entire share. But, if you have, so basically you'll get paid dividends per share. So, if it would be best if you can buy an entire share or multiple shares so that you can get dividends at the higher rate. Okay, some of the hot top REITs out there available now on the market are the GYT, that's the ticker symbol or the ticker letters, or the Getty Realty Group. Okay, right now, as of today, recording this video, Getty Realty Group is going for $35.01 per share, and their dividend yield is 4.91% per year. Okay, and of course, the stock will go up and go down and will decrease in value on top of your dividends. So, I know people are saying, well, I'm only going to get 4.91% of my total stocks. It gets a little deeper than that. But these are your dividends. So these are your passive income monies that you get per share each year. And of course, the more shares you have, the more money you will get in passive income in your dividends. Okay. Number 2 would be AMT, or American Tower Corporation. Now, what this list that I'm giving you is in no particular order. These are just 3 examples of 3 of the hot REITs out there right now. All right, American Tower Corp is basically, they own cell phone towers and stuff like that. So people or entities like AT&T, Verizon, Sprint, they all tap into towers, correct? Well, American Tower Corporation basically owns these towers. Okay, and right now, per share, they are $216.72 per share, and their dividend yield is 2.88%. substantially lower than the Getty Realty Group, but it's still a decent way to diversify your portfolio by having the American Tower Corporation as one of the REITs on your portfolio. Another hot REIT is the Realty Income Corporation, and they are the corporation that pretty much has like the CVS's and the Walgreens on their property. They pretty much own those lots and those commercial properties, and they are trading for 66.85 cents per share, and their dividend yield is 4.46% annually. Okay, so again, the more shares you have in that REIT, the more um, the more kickback or the more dividends you'll receive as passive income. All right, so for more information on REITs, I'm going to put the information, of course, in the video details, but it is REITs, that's REITs.com. Okay, and it's a good way to round out your portfolio. Number 6 on ways to invest that FU money would be invest in yourself. Take a course that will allow you to increase your income. So if you are making $15 an hour as a, let's say, medical assistant, and there is a course out there that you can take that will allow you to substantially make more money, like let's say going from a medical assistant to, like, let's say, a surgical tech. Okay, and the course costs whatever the amount of money is. Invest in that course and that time, because you can go from $15 an hour to $40 to $45 an hour. I'm just using that rate loosely because I don't know. It of course depends on where you live and what the market is for surgical techs, but you get my drift. If you invest in yourself, that gives you the highest return on your dollar for investment. Okay, and then that'll free up and give you more money to actually invest in your stocks and in your Roth IRA and in your REITs, and to deposit into your high yield savings account. Okay, so invest in yourself, or start or grow your business. Use that money to start a business or grow a business. Okay, that is definitely, if it's going to make you passive income in the long run, once you're up and running, I'm all for it. The key is bringing in more money into your revenue stream to invest for the long run. That is the whole key. There's no get rich quick schemes that is going to put you in alignment with becoming a very wealthy person down the road. All right, so those are my 6 ways to invest that FU money that you worked hard to get up. All right, I wish you all a good luck and best wishes on your path to wealthiness. And I will be back for some more tips and tricks. Ciao.